Today I'm going to talk about the SEP IRA for the self-employed small business owner. There's a huge tax reducing benefit that's different than other retirement plans. And there's also a huge mistake that often gets miscalculated when figuring out the contributions into the SEP IRA. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name's Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. The SEP IRA is a lot like a 401k or a traditional IRA in that the money you put into the SEP IRA goes in pre-tax, grows tax deferred, and comes out as ordinary income. So just like the 401k or the traditional IRA, it could help you reduce your overall tax liability in the year that you contribute. So that's this year. So if you put it in now, it could count for 2018, or you can put it in and have it contribute for 2019. It depends on how you want to reduce your taxes. Now, the maximum contribution that you can put into the SEP IRA is $55,000 for 2018. And in 2019, it's going to go up to $56,000. So we're already in 2019. So if you're putting in those contributions for 2018, you still can put them in there and it's up to $55,000. Or you can do it for 2019 and that's going to be $56,000. Now, those are the limits that you can put into the SEP IRA, but those limits get capped at 25% of the total compensation or the total income. So the most that you can do is the $55,000 or the $56,000, but it's also only up 25%. Whereas the traditional IRA or the 401k could be 100% of your compensation that you can put into those plans. So it's a little different than the traditional or the 401k as far as the percentage contribution. But here's a huge benefit of the SEP IRA that separates it from other retirement plans. And that's the fact that it's the only plan that you can contribute and open up after April 15th of the tax filing deadline. So if you have an extension, so if you're filing an extension from April 15th and carrying it out to October 15th, you have until October 15th in order to make those contributions. So it includes the extensions, which is very different than other retirement plans. With the traditional IRAs, you have to get those funded before you file or the April 15th deadline. This year, I believe it's April 17th, but the first deadline that you have, that's when you need to get those contributions in, whereas the SEP can carry it a little bit further. So if you're a little bit behind on filing, you filed the extension, you still have the opportunity to contribute to the SEP IRA and reduce your overall tax liability. Now, the contributions are a huge pitfall for a lot of small business owners because there's a lot of misinformation out there on the web or even on the IRS's website. And you would believe that the maximum contribution for the self-employed business owner was 25%. But the calculation, it gets very complicated for the small business owner. I'm gonna go through it so you can see what it is, and then I'm gonna give you a couple of tips to make the calculation a lot easier so you can actually figure out how much you can put into the SEP IRA. So the example I'm gonna give is somebody that has a net profit of $100,000. So if we make $100,000, you would think that you can contribute up to $25,000. But the math gets a little bit more complicated than that because first we have to subtract 1/2 of our self-employment tax. Is going to be half of 15.3%. But we have to do a couple of calculations before we get to that point. And I think you'll see once I get through it. So if we take $100,000, we have to subtract 1/2 of our self-employment tax. So first we've got to subtract it. So we're going to subtract this and we're going to multiply 100,000 times 1/2 of 15.3, which is 7.65%, or you can multiply it by 0.0765, which is going to give us $7,650. So then we have to subtract $7,650 from our 100,000. So I'll take it down here and we'll go $100,000. Rewrite it down here, 7,650. That's going to give us 92,350. So then we have to take this number and again multiply it by the other half of the self-employment tax. So we're going to multiply the $92,350, multiply this by 0.0765 because it's the other half of the 15.3. So we're going to multiply that out by 0.765, multiply that out, and that is going to give us $7,065. So then we're going to take this $7,065 and subtract it from our $100,000. So that $100,000 minus our $7,065 gives us $92,935. So let me put this on the next page. $92,935 is what we have right now. So I'm going to rewrite it up here. It's $100,000 minus $7,065. And that's going to give us our $92,935. So it's $92,935. So then this is the calculation you get to when you want to subtract 1/2 of your self-employment. And that's super complicated. So then we have to take this number and we want to multiply it by our factor rate. So then the next thing we need to do is go to publication 560. I'll put the link in the description at the bottom. And on page 23, for our self-employed individuals, we have our rates that we need to apply to this number. So you can't just go ahead and put 25%. So if you want to do the maximum 25%, then it gives us the maximum rate of 20% of this number. Now there's another way to figure that out. If you want to do 25%, we do 0.25, and then you have to divide that by 1.25. So let's say you wanted to do 10%, it would be 0.1, divide that by 1.1. So you have to add 1 to the percentage in order to do it. And what you're going to get is you're going to get 0.2 or 20%. So then we want to take this number and multiply it by our 20% or 0.2. So if we do that on our calculator, we get 92,935 times 0.2 is 18,587. 18,587. So if we made $100,000 and that was our net profit, then this is the maximum amount that a self-employed individual could contribute. Now that calculation is completely different for an employee. It would actually be 25% or whatever rate that you want to contribute. But for the self-employed, you have to take this extra step and reduce it by 1/2 of your self-employment income. Now there are 2 parts to the self-employment tax. Or actually there's 4 parts, but you're going to have the Medicare and the Social Security. So Social Security is at 6.2%, and then your Medicare is at 1.45%. But here's the big difference. If we increased our income or our net profit was well over $100,000, the limit on the Social Security tax gets capped at $128,400. So this gets capped at $128,400. So then you have to factor in that this isn't going to be there if you're over $128,400. So it's not 18.58% of whatever number it is. If you thought that that was a quicker way to do it, that would just be way too easy of a calculation if that were the case. So they had to make it more complicated. I don't know why, but that is what you have to do. So you do have to go through the entire calculation if you're self-employed and you want to make sure that you're paying the least amount in taxes and contributing the maximum amount. If you need help figuring out this calculation or what's the best way to contribute to your retirement plan, go ahead and click on the link in the description at the bottom. Reach out to our office. It's what we do. We can help you get there, reduce your taxes, plan for retirement, and just do better financially. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.